In the last 3 years, AI stocks have minted millionaires overnight. Nvidia alone turned $10,000 into over $200,000. Now, legendary investors are sounding the alarm. Some are calling this the biggest bubble since the dot-com crash. So here's the million-dollar question. In 2026, are AI stocks still a gold mine waiting to explode, or a ticking time bomb about to wipe out retail investors? Hi, my name is Kartik. Today, we will learn about Al Bubble, risk or reward. By the end of this video, you'll know exactly how smart money is positioning itself right now, and more importantly, what you should do. Let's dive in. First, let's understand why AI stocks exploded in the first place. Tech, healthcare, finance, defense. Unlike past tech hypes, AI isn't just one sector. It's infiltrating everything. Healthcare companies use AI to discover new drugs in months instead of years. Financial institutions deploy AI to detect fraud in real time. Defense contractors build autonomous systems. Data center construction time-lapse. Semiconductor manufacturing, this created a massive infrastructure boom. Companies are spending hundreds of billions of dollars on data centers, advanced chips, and cloud infrastructure. Nvidia, Microsoft, Google, Amazon, Meta, the giants saw this early. Nvidia became the arms dealer of the AI revolution. Microsoft integrated AI into every product. Google and Amazon are racing to dominate AI cloud services. Revenue charts showing actual AI earnings growth. Here's what's different from past bubbles. These companies aren't just promising future profits. They're printing money now. Nvidia's data center revenue grew from $3 billion to over $47 billion in just 3 years. Real revenue, not just hype. AI stopped being a future story. It became a profit engine, and that attracted everyone. The bubble fear. 1999 dot-com chart versus 2023 to 2025 AI stocks chart. But here's where things get uncomfortable. If you look at AI stock charts next to the dot-com bubble, the similarities are chilling. Bubble characteristics appearing. Extreme valuations. Check. Retail FOMO flooding the market. Check. Companies adding AI to their name and watching their stock double. Check. Every investor convinced this time is different. Check. Historical footage screenshots of dot-com era headlines. In 1999, investors said the internet would change everything. They were right. But 90% of internet stocks still crashed by 80% or more. Comparative data table. So what makes 2026 different? 3 critical things. 3 points appear one by one. Number 1, real earnings. Dot-com companies had zero profits. Today's AI leaders have fortress balance sheets and massive cash flows. Number 2, actual adoption. In 1999, most people weren't even online. Today, millions of businesses already depend on AI tools daily. Number 3, infrastructure maturity. The technology works. It's not a promise anymore. Warning symbol pulsing. But here's the catch. Just because AI is real doesn't mean every AI stock deserves its price tag. Some are trading at valuations that assume perfection for the next decade, and perfection never happens. Who really makes money? Gold Rush historical imagery transitions to modern tech. Now, let me share the most important insight of this entire video. In the 1849 Gold Rush, thousands rushed to California to strike it rich. Most went broke, but you know who made fortunes? The guys selling pickaxes and shovels. Pyramid diagram showing AI value chain. AI has the same structure. At the bottom, you have the infrastructure layer. These companies provide the chips, servers, and data centers. Above that, you have the platform layer, the cloud providers. At the top, you have application companies building AI products. Infrastructure layer with emphasis. Here's the reality. The infrastructure players are making guaranteed money. Because whether AI applications succeed or fail, they all need chips and computing power. Company examples appearing. Nvidia doesn't care if ChatGPT beats Google or loses. Both companies buy billions in chips either way. Data center companies don't care which AI app wins. They all need server space. Contrast with application layer. But application companies? They're in a war. Most will fail. A few will dominate. And right now, nobody knows which ones. Risk-reward scale visualization. This is why smart institutional money has been rotating out of speculative AI software stocks with zero revenue into proven infrastructure plays with locked-in demand. The picks and shovels always win. In a gold rush, bet on the shovels, not the prospectors. What smart money is doing. Institutional investment flowcharts. So what are the professionals doing right now? Because they're not panicking, and they're not abandoning AI. They're adjusting. Portfolio rebalancing. First, the rotating from hype to profits. 6 months ago, any company that mentioned AI in an earnings call saw its stock jump. That party's over. Institutions now demand proof, revenue, margins, competitive advantages. Diversification pie chart. Second, they're diversifying within AI. Instead of betting everything on one chipmaker or one cloud provider, they're building portfolios across the entire value chain. Categories appearing. Some infrastructure, some software, some enterprise AI, some consumer AI, some international exposure, not putting all eggs in one basket. Cash flow statement. Third, they're obsessed with cash flow, not promises, not total addressable market slides. Cold, hard cash generation. Because in a market downturn, cash flow is what survives. Long-term trend line. Fourth, they're thinking in decades, not quarters. AI isn't a trade. It's a transformation that will unfold over 10, 20, 30 years. The winners will be patient. Here's what they understand that retail investors often miss. Smart money isn't leaving AI. It's becoming selective. The difference between selective and scared is everything. Panic selling versus strategic positioning. Scared money sells everything and runs. Selective money separates signal from noise, quality from garbage, and positions for the long game. Final verdict. So here's the final verdict. Is AI a bubble or an opportunity? The answer is both, and neither nuanced breakdown. AI itself is not a bubble. The technology is real. The transformation is happening. The demand is sustainable. This is like asking in 1999 if the internet was a bubble. The internet wasn't, but most internet stocks were. Winners and losers. Some AI stocks are absolutely in a bubble, overvalued, overhyped, trading on narratives instead of numbers. These will crash hard. But other AI stocks are generational opportunities. Companies with real moats, pricing power, cash flow, reasonable valuations. These will create enormous wealth over the next decade. Crystal ball shattering, replaced by research documents. The challenge? Nobody has a crystal ball. Not me, not professional analysts, not the CEOs themselves. The future is uncertain, always. But here's what we do know. AI will not make everyone rich. Easy money is gone. But ignoring AI completely could be the biggest risk of all. Strategic positioning. The play isn't to go all in or all out. It's to be strategic, selective, patient, diversified, and educated. Final statement text. AI won't be a straight line up. There will be crashes, corrections, and casualties. But the trend is unmistakable, and the opportunity for disciplined investors is massive. If this video helped you understand AI investing better, hit that subscribe button. We break down complex investing topics into clear, actionable insights every single week. And here's my question for you. Drop a comment right now. Do you think AI is a bubble about to burst? Or the biggest opportunity of the next decade? I read every comment, and I'm genuinely curious what you think. In the next video, we're going deeper. I'm breaking down the specific AI stocks institutional investors are buying right now. The names, the strategies, the exact reasoning. You don't want to miss it. Hit the like button if you found this valuable. Turn on notifications so you never miss an upload. And remember, the best investment you can make is in your own financial education. Thanks for watching. Stay smart, stay strategic, and I'll see you in the next one.